Hey everyone, so we just wrapped up our first bot battle, a test of a brief bot trading competition where people in the community just run Hummingbot with a small starting balance and see who can make the most money and generate the most volume. So I also participated more for fun, but I was definitely not. My bot didn't do great. It lost $5 out of the initial $100 it started with. So I'm definitely not going to win the actual performance prizes, but I'm going to gun for the content write up and try to explain in this video um, what I was trying to do with my strategy, how I guess it lost $5, how I would improve it, and also why I'm actually pretty happy with the end result. So let's get started. So yeah, just to first recap on the bot battle. We basically just had it. People run bots for 48 hours during last week. So a bunch of us were had a hacker house in Bali, so we had a chance to all run bots together. So I think about 7 or 8 people ended up participating from the community, and we're going to make this a standard part of our bot camp educational platform, which will hopefully get people to really practice running bots all the way through. But overall, I thought it was a very successful beta, at least for me personally, because I felt even though I lost that $5, I actually learned quite a lot. So here's the actual my bot running right now. I kind of kicked it up again. I actually use Dashboard to orchestrate it, so I can just click this and then go to the terminal in order to see how it's running. This is the actual bot as well right now. So this is what's displaying status. So as I mentioned, here's the actual bot running. This script is basically over here. So you can see that this is all free and downloadable from my GitHub. But you can see that this strategy, which is all in the script, is really only 200 lines of Python, a lot of which is basically just formatting the status and showing you the custom information that you want. I'm going to go into a bit more detail into this script because one reason why I ran this strategy was because I intend on kind of using these like simple scripts in order to kind of reformat the market making course part of BotCamp. And I was pleased that I came out with a fairly generic, fairly intuitive script, in my opinion, that will help people understand kind of like the theory as well as the application of market making. So before I go into too much detail, let me just show you how I was running this bot in the first place. So this is the performance. I'm analyzing this using the new updated strategy performance section, which is now on the main branch. So after the bot competition was over, I just dropped the SQLite database file in here and to generate the status. And you can see it. We'll go into this all this charts a bit later. But when I was actually running the bot, I was running. I had Dashboard deployed on an AWS server in Tokyo, and where I had someone our QA team who added their QA credentials to the master config, and then I was able to copy that master config onto new instances. This was the instance I have running. I've also started again, but I also have a few instances down here for other things I was doing. So the bot itself is running as well. I can attach to it using the Docker attach command, and I've also already SSH into it over here, and it's actually running right now. I'm pretty comfortable having it run because having it run for 48 hours, it still ended up only losing like $4 or $5. Like a few orders here and there is not going to make a difference. But I was also kind of I think I've also have a good understanding for how the strategy would behave. So what I want to show you is that this is actually a fairly complex strategy because not only is it setting the spreads, it's actually fetching those spreads directly from the price history of the asset. It's also trending the price, shifting the price in the direction of the price trend, which is calculated using RSI, and based on the user's inventory position relative to a target ratio, it will also shift the price in the direction that will try to get the user back to their desired target inventory ratio. So it has already the three components that I think most market making strategies need to deal with, which is to deal with the volatility of the price, number two, the direction of the price, and number three, their own relative inventory position, relative to where they want to be. So let's first go into detail in terms of like the code. Let's see how it's doing that, and then we'll come back and look at the performance of the strategy. So even though this script is only 200 lines of code, I think it's actually a pretty powerful and elegant market making strategy that can be applied to lots of different situations. So as history, when we first started Hummingbot, we had the pure market making strategy, and then we kind of like also use a paper from Alvanata and Stoikov to create the Alvanata strategy, and we've also kind of had scripts that try to create simpler versions that allow people to actually customize what they want. And I think we've learned lots of lessons from that, which is that a lot of times you're really just applying the same principles over and over again. So what this strategy does is attempts to basically boil a single-sided market making strategy down to really three variables. The first is the fetching the price spread using natural true range, which is the amount of oscillation in the price over the last X intervals. So essentially what this says here is that let's just, instead of knowing what the spread is up front, let's take the natural true range, which is the oscillation over the last 8 1-minute candles, and then basically apply scalar to that. So the scalar I use here is 5, and then that number will be, just use that as a spread. So that way, if the recent history of the price was more volatile, the spread would be larger, and if the recent price history was flat, then the spread would be smaller. When I do this, I divide by 2 here. I actually think you probably shouldn't, because I think the price is already the oscillation in either direction as an absolute value. So I believe that I would, but overall it doesn't really matter, because essentially by intuition, the longer this candle's length, the lower the average deviation might be, and so you might apply a higher scalar and vice versa. So you probably need to tune this to see what the right value is. But I think this is a good way to, in my opinion, to kind of not define the spread, because the spread for Bitcoin or Ethereum might be a lot tighter than that for an altcoin, but instead let the natural price volatility estimate the spread for you. This one for price source, I really I didn't really have a preference of use. So mid-price last trade are probably more common. I think I used best bid here because I started with, I think yes, I started with, I think, only 20%, say, and I had inventory ratio of 0.50%. So I think I used best bid to try to get up to 15, but then I also forgot to change it during the experiment. One thing I noticed is that I was trying to gun. I was gunning for volume a little bit more aggressively in the very beginning. So I think I had a scalar here of 2, and then 3, and then finally 5. After I realized that this thing's gonna be slowly losing a bit of money, and then that's why I increased the scalar to 5. I think halfway through the competition. So finally, the other 2 variables that this strategy takes into account is the direction of the price trend, which it gets using the RSI. So basically, down here, it's actually going to basically compute the price trend shift as well as the inventory price shift. So what that means is basically it will take the candle's length, which was 8 minutes, compute the RSI based on those 8 minutes, and if the RSI is basically above 70, it will just basically shift the price up by the amount of the spread it had calculated earlier using the NATR, and then if the RSI is less than 30, it would basically shift the price downward by the amount of the spread, and then if the RSI is in between, it would basically do some in between shift. Similarly, I also applied a similar shift for inventory after I realized that like after the spot, if it kind of goes into I just wanted to keep on trading, so that's why I kind of added this inventory shift. So what this one does is it basically assumes your target ratio is something like 50%, and if it goes higher or lower, then it creates a delta, and then I clamped the delta to one, and then also essentially multiplied that basically by the inventory spread as well. So basically there were two essentially shifts onto the price caused by number one, the trend of the price, and number two, in terms of where you want to be in terms of inventory position. So these two, this is basically the essentially what the Alvanata strategy is really doing. So I think I think the I would say the model itself. I mean, there's value definitely in the academic model itself, but I think this might be a simpler way for users to actually have the same effect as Alvanata, but do it in a more intuitive way, with one that they can control more easily. So I think what we'll likely do is I'll probably make this a basis of some of the teaching examples we include as part of BotCamp in order to give users more intuition around what you're really doing as a market maker and how to exert more control over your orders and over the how you kind of profit and what the risk factors are there. So once you've kind of shifted the price, in either direction, based on both trend as well as inventory, then you've put a spread around that. The only other really thing to make sure to do is to make sure that your buy price is no more than your best bid, and the sell price is no lower than the best ask. To make sure you don't cross the spread. And once you've done that, the buy and sell orders are created. Again, note that I set an order, I think an order refresh time of 55 seconds here. It's really a lot of these variables were just be kind of like not really done with a lot of precision, but really I think this is kind of the value of backtesting, which is kind of why we're adding backtesting into dashboard to try to help users create more backtestable strategies like this. So once you've done that, and then basically it will place the orders in the market. And this status I created to customize what you're seeing so that you can see more information about the spreads you're placing and how it derived the spreads and the prices, as well as the candles, as well as the trades. And I think that this status that I've created is designed to give you some intuition around what the bot's doing. So this spread section here, it shows that based on the recent history of this price, which seems pretty stable, that's why the spread is only 13 basis points. And in price terms, because the price is around 0.1204, that's like around 0.0002 in terms of spread. So currently, this bot is placing pretty tight spreads here. It's probably very close to the top of the order book here in terms of spread. And then how it's constructing that spread is constructing that spread around a certain reference price. This reference price originally was 0.1202. This was the best bid, but because of these two shifts, it's actually now placing spreads around 0.1203. And it's primarily because it's trying to kind of get to a certain inventory ratio, and that's why it's doing inventory shift, but also the price trend. It looks like the price trend is starting to kind of like go down. It looks like it's trending downward, so that the price is also trending downward as well. But I'm pretty happy to let this bot run because it's even though it hasn't made a lot of money, it's pretty stable because it reacts very quickly to volatility. Any kind of larger changes in the price affects the natural true range, and the spreads will tend to widen out. So that's why it's done almost 400 trades since I started running the bot. This only ran for that 2-day period, but it really only lost like $5. And actually, if you look at the actual the P&L, most of the losses were actually due to fees. The trade losses were actually only less than $1.40. So let's now take a look at the actual strategy performance itself using the dashboard and see what we can glean from kind of using this in order to see what the bot did. So as I mentioned, you can just take the SQLite database file. So I've actually added everything related to the bot battle in this bot battle directory in a fork in my Hummingbot fork. So you can see kind of the starting balance I had when I purchased a bit of Say in the demo account. And here's the screenshot for 10 minutes where it did 3 trades. Here's the screenshot after 22 hours where this was the first time that I think I saw the trade P&L starting to be a little positive. I think this is after I made the tweak in the bot. So the bot definitely did better after I widened the spreads a bit. And here's the final one where this is basically the entire 2-day history for the bot here. So as I mentioned, you can just take this SQLite database file. If you download this and plug it into the most recent version of Dashboard, you can also see exactly what my volume was. So what can we learn from the performance here? Well, the first is that this is really an illustration of impermanent loss or the inventory risk that a market maker faces. Because just like when you set your assets in the Uniswap pool, when you set 2 orders, you're providing option to the market to both buy and to sell. And so if you consistently place those 2 orders on the market, you're likely going to be kind of caught in a cycle like this, where you buy on the way up, you sell on the way down, you buy on the way up, you sell on the way down. These kind of patterns are very hard to get right because you're every direction the market goes, you're kind of taking the opposite one. So the way to kind of win the market, win this is to try to time your oscillations in line with the spreads. But as you can see here, I probably set my spreads a bit too tight. So, however, it doesn't mean that you may still get the minor ones, some of the minor ones right. So as you can see here, some of these times I did actually sell higher than I was buying. So a lot of times in terms of market making, it's really about trying to time your spreads and your orders to the market. But because here the reason this is tough strategy is because I'm making a market in the most liquid market for Say, and I'm not hedging that risk anywhere else. So I think for me, I would only run this type of strategy if I'm basically if commissioned, if I'm getting some type of reward for doing so by a liquidity mining platform, or if I have a contract with the market maker to provide liquidity for their pair or something like that. So but I think or I would probably set much wider spreads than I would do here as well. But I think what's interesting is to look at some of the numbers here in terms of what's happened in the market. So it does seem like the market activity, the losses are concentrated at certain times, whereas I think at certain times, and this might correspond to when there's when the market's quiet versus wide. So it's possible that these times are more range bound than others because other markets like New York or London aren't open. And when I look at the returns distribution, I can see that I have a lot of this is pretty much what I expected in terms of inventory. So overall, I think ways I would improve this is I would likely want to run this market making strategy on a less liquid exchange, perhaps for Say, but maybe using the information from the Binance exchange, or I might try something like cross exchange market making, where I'm trying something else, But I think, say, given the volatility of this pair, I think that I think a better one to explore might be some type of a grid or more of a directional strategy that's trying to capture the volatility more. So I hope that that was a good write up of this strategy, and hope people learn from kind of like what I did. And feel free to yeah, kind of like uh, look at the GitHub. I'll put a link over to this video where you can access all the bot battle info, including the SQLite database you'll need for the performance dashboard, as well as the code for the script itself.